All right, so it feels like not a month goes by without something major taking over the headlines. Last month it was AI supposedly disrupting the software industry, and now it's Operation Epic Fury and everything going on in the Middle East. Now I actually spent a good amount of time digging into this, more than most people should really, and I put together a full write-up on our website. You can find that at www.paragon-wealth.com. But I wanted to take a few minutes here to walk through the key points and what I think actually matters. All right, so what's going on? At a high level, this conflict has led to a disruption in tanker traffic through the Strait of Hormuz, and that's really the key point. Because the Strait of Hormuz isn't just another shipping lane, it's one of the most important choke points in the global economy. Roughly 20 to 25% of the world's oil supply flows through the narrow passage. So when it gets disrupted, it's not just a regional issue. It becomes a global economic issue very quickly. And so why does this matter? This is where things get a little bit more interesting. It's not just about how oil prices go up, although that's the obvious one. There are second and third order effects that people don't always think about. For example, the region also produces a significant portion of the world's sulfur, which is a key ingredient for fertilizer. So if that supply gets disrupted, it can affect agriculture, which then affects food prices. So you start to see how something happening halfway across the world can actually show up in something like grocery bills here in the US. So when markets react to something like this, they're not just reacting to the event itself. They're reacting to the uncertainty, and the market hates uncertainty. Investors immediately start asking, how high do oil prices go? How long do they stay there for? What happens to inflation? How will the Federal Reserve respond? And today, a lot of that reaction is being driven by automated systems, algorithms. So markets tend to move quickly, sometimes before we even have all the information. Sell now, ask questions later. But here's the part that I think is really important for investors to understand. Historically, markets tend to struggle during the initial phase of geopolitical events, when uncertainty is the highest. But once that uncertainty starts to stabilize, markets generally recover relatively quickly. So while these events can feel dramatic in the moment, they don't necessarily change the long-term trajectory of markets. So instead of focusing on the headlines, here are the three things I'm paying most attention to. First, oil prices. Not just where they go, but how long they're elevated. Short-term spikes are manageable, prolonged high prices are where it becomes a real issue. Second, how the Federal Reserve responds, because if inflation starts moving higher again, the Fed is in a tough position. And third, inflation expectations, because sometimes what people expect can actually drive behavior and make the situation worse. From a portfolio standpoint, we're not making reactive decisions based on headlines. Our approach doesn't change just because of one event. We focus on owning strong businesses, maintaining diversification, and making sure the companies we own can handle different types of environments, including something like an oil shock. That's really the whole point of how we build portfolios. We really want to build them for resiliency. And I can give you an example. Recently, I had to make a hard decision of removing a company from one of our portfolio models because it had taken on way more debt than I was comfortable with for that specific model. Now, I actually still think the company will likely be worth more money in the future than it is today, but if I don't follow the process, then the process doesn't really mean much. That discipline is really what matters, especially during times like these. So the bottom line is this: we can't predict geopolitical events, oil prices, or how the markets will react in the short term. What we can do is build portfolios that are strong enough to handle them. If you want a deeper dive, including how this could impact things like inflation, agriculture, and different parts of the market, I'd encourage you to read the full commentary on our website at Paragon-Wealth.com. And as always, if you have any questions about your portfolio or how this might affect your situation, don't hesitate to reach out. Thank you. And I'll see you next time on Paragon Perspective, The Long Watch.